Hello traders, Owen Larson here with Mission Winners, and welcome to Market Edge Ahead of the Trade. This week, we are watching a market that continues to climb that classic wall of worry. Volatility is still out there, news headlines are everywhere. But for the disciplined trader, there have also been some very clear signs of strength developing underneath the surface. On today's episode, we're going to cover three important things. First, Pat Walker is going to walk us through the major ETFs and show us exactly where leadership is starting to surface and where caution is still required. Second, I'll break down a key educational lesson on repeated sector strength and why gold stocks have been a textbook example of that very concept lately. And then we'll finish with Pat's deep dive into the MAXLIST stocks, the big institutional names we track every week.
Great template here, weekly on the left, daily on the right. You can see themes much better when you have both of them together and help you make better investing decisions. I taught this at IBUY for years. So again, what do we see here? Well, that's a hard decline here and it's still down. It's bouncing around, but there's a ton of overhead supply on the weekly and the daily. What does that say? Be careful, not just with the ETF, but with energy stocks. See? Now it's a broad brush stroke. It's not just this specific ETF or stock. It's energy in general. It's in a hard downtrend. Be cautious. Let's continue onwards here. First Trust Dow Jones Internet. This one showed some life. There's a lot of stress down here, okay? And you can see it on the weekly. But notice this. It had good power several days ago on a slight volume pickup. Notice where it stops, right near the falling 21-day moving average. That's 21-day exponential. There's a lot of research that went in that moving average, by the way. Okay, that's the 50-day simple, 21 exponential, 8-period exponential. What's it need to do? Push through here. But it does tell us something. A lot of overhead supply there, okay? But there's something else positive. What did it do Friday? Oh, there was some volume coming into it. I'm not saying buy it, but it could be. I'm not saying it is, but it could potentially be a start to turn a lift in this industry sector, in the internet sector. That's good to know. Continue on. IBD 50 is picking up a little bit. You can see it on the weekly and the daily. Not a lot of volume power in there. It's below all the moving averages, but it is starting to show a little bit of strength. That's good. That's a plus. Just something to remember. Gold miners. Oh, look at that. I mean, you look at this and go, gosh, there really ain't too much going on there, Pat. Oh, wow, look at the power this thing's been demonstrating. Yes, and it has for a while. Look at the weekly chart and the lift. And this is why we've owned and we own GDX. And I'm not bragging. I'm trying to point out what to look for. Look for strength on weeklies and dailies. It will guide you to areas for potential money, potential profits. We own this. We're in good shape. We're letting it work. And I'm thankful. And you can guess the next one. GLD. Entry spots right back here. Here's on daily. And it's just working nice. Daily's further back here. Okay, there was another spot in here. But it's working. Great. And what are we doing? We're letting it work. Where's it going to stop? I don't know. Don't need to know. Have we sold a little bit into strength? Yes. And here's a very valuable lesson for everybody. It's a maxim on Wall Street. You'll never go broke taking a profit. That's not true. If you limit your profits and don't limit your losses, you'll go broke. Don't do that to yourself. Please, I'm asking you. It's trending nicely. We're in good shape. We're going to let it work. Now, you go, boy, this is really good. Would you buy it up here? It's too extended. You've got a price gap here and a price gaps here. Price gaps indicate high investor emotions. High investor emotions and good decision making is a mutually exclusive event. So be careful. We're in good shape. Let it work, and that's what we're doing. Continue onward. Cybersecurity. There's nothing there. It's showing a little life, but man, there's some overhead here, okay? It is starting to improve, though. Look at the weekly. Now, it's not saying buy me, but it is saying it's starting to maybe turn a corner. That's good to know. It tells us something. Maybe the rally's spreading out. There you go. Biotechnology still lagging pretty bad, folks. Be careful with biotechnology. Online retail lagging pretty bad here. Not a lot of power on the daily. But then you look at the weekly and say, oh, man, that was some buying volume coming into it. You're exactly right. Is there a really clean entry? Well, it lifted up here, but there was no volume. So be careful with that sector. Continue onwards. Software, technology, lifted up here. This is why we do this. You look at this and go, yeah, that looks all right. But then you look at this and go, wow, look at that reversal bar on the weekly and look at the volume that came into it. That's good. Maybe software technology. And you already know this. If you follow the markets, technology's starting to prove a little bit here. Is there an entry on this? Possibly here. But more importantly, it tells us something better. As I stated just a second ago, software technology is starting to improve. We like that. Something to delve into or look into. Medicine's still kind of choppy here, okay? A lot of overhead supply. As you can see, it lifted up, but then what's it do the next day? Lifts it up on okay volume. The next day, it falls on much heavier volume than it goes up on. So medicine's still a little choppier here, a little rough, okay? Mid-cap, iShares mid-cap, nice reversal bar on the weekly. You can see it had a good lift on the daily. It's possibly starting to improve. What would that say? That the rally just isn't in one narrow sector, it's in other sectors too. We'll see more of that in a minute, okay? Just pointing this out, slight improvement. Aerospace and defense is hanging in. You say, oh, that looks pretty good. Look at the weekly reversal bar. That's big, okay? I think there was one or two stocks that really caused this catalyst, okay? Picking up here, possible entry, it would be aggressive, taking out this top here, all right? It is kind of loose, but it does tell us something. Aerospace and defense sector is improving. Isn't that good to know? Relatively close to the falling 50-day. Continue onwards. ITB, home construction, lagging, well below the falling 50-day, all right? And it just says, and you can see it even on the weekly here. There's no real power yet. I'd stay away from it for right now, okay? Growth, picking up a little bit. IBW, S&P 500 growth, picking up. Nice reversal bar here on the weekly. Not a lot of power. Not a lot of power on the daily either. Not a lot of conviction, okay? But it is starting to improve a little bit. That's good to see. I'm not saying buy it, but I am saying this is another sector that looks like it's starting to improve. S&P 500 growth. That's nice to see. Small caps, it's still lagging pretty much here, folks. I mean, it looks all right on the weekly, but we need to see some real power. Now, what's one plus? Well, Patrick, that was pretty good volume on that bar there. You were right. If it starts to push through these tops, what will that tell us? That the rally is even spreading into small cap stocks. We'd like to see that. Am I saying it's going to happen? No, at Mission Winners, we don't forecast. We just let price and volume guide us. There you go. Let's continue onwards. Real estate picking up a little bit. Big tail bar on the weekly. As you can see, reversal bar there. Would be nice to take out these tops, but tons of overhead supply, okay? Still be a little cautious with that. Transportation, it's improving a little bit, but again, tons of overhead supply. You got to be a little cautious there. Same thing's true with airlines, improving a little bit. Banking, look what it did. It lifted up and it gave it all back in the next bar, all right? Still some slop there, okay? And what's it tell us? Yeah, there's a rally occurring in certain areas, but it's not everywhere. Be selective in your endeavors. And at Mission Winners, we point out sectors and stocks to look at, to maybe buy, and areas to avoid. Continue onwards. Insurance, still, look at that gap down, folks, on volume. Whoa. Drop. Be careful there. Now, on the weekly, you've got a reversal bar here, okay? But on heavy volume. So what does it need to do? It needs to get interested in insurance or this ETF, needs to take out the highs of this bar with volume. But again, on the daily, there's some selling occurring in there, okay? I'm going to refresh this bar real quick too, just so we're all up to speed. So it's okay, but not that powerful. I'll share something with you, team. This is not an opinion, it's a fact. The air is better above the rising 50-day moving average line. This is the 50-day moving average line on the daily, the green line. Things are better above a rising 50-day. Good to remember. As you can see, that's well below the falling 50-day. Not much power there in regional banking. Really not a lot of power here. Says be cautious. Let's continue onwards. What do we have here? Mid-cap picking up, but still a lot of overhead supply. You can see it on the weekly and the daily. Just says be a little cautious with mid-cap. Oil services lagging. Be careful with oil services. Pharmaceuticals, still a lot of overhead. It's going to need to show some power. QLD picking up a little bit. Okay. Had a good volume bar here. This is the NASDAQ 100, folks. This is a great proxy. Needs to show some more power. Lifted up Friday a little bit, but not a lot of volume. Volume, again, tells us other people see what we see, and they're acting on it. They're buying it or selling it, one or the other. We prefer when they're buying it, right? Green volume bar. There you go. QQQ, same situation as QLD. Retail pick up a little bit. Nice lift on the weekly, okay? Still kind of sloppy on the daily. So just, it's not clean and simple. Many of these are not clean and simple. Cloud computing is not clean and simple. Silver's lifting up. It's had a decent move here. What was the other one that I showed you earlier? Remember? Related to precious metals? Gold and gold miners, which we own. There we go. And gold stocks. Gold stocks, we look for strength. There's silver. And I'm going to do something to help here. And we're going to go back to this. There's silver, right? And here is gold. There's gold, weekly and daily. And there's silver. Where's the strength? It is, and it was, in gold. There's power in gold. That's why we own it, and we don't own this. There's an important lesson. Please note, I'm not bragging like, oh, wow, look at this. No, I'm trying to educate what to look for in the charts to make better investing decisions. Let's continue onwards. Here we go. Steel's still kind of lagging. Be cautious there. Semiconductors showing a little bit of power on the weekly. We really need to take this out here. What's the one plus about this bar, folks? It went up and it closed near the highs on that bar on a pickup in volume. Semiconductor, technology related, lots of overhead supply. Those slam dunk places right there. Same thing's true with SOXL. Spiders pick up a little bit here. Good lesson. Rallies up to the falling 21-day and drops. Rallies up to the 21-day, falling 21-day and drops. Rallies up to the falling 21-day and drops. People use these moving averages, folks, to their benefit. Emission winners, we do too. What's this need to do? Really needs to take out, you know it, the falling 21-day with volume. Maybe it'll do it this week. And you know what? That would be a plus on the spider. Same thing's true with SSO. I do like the volume pickup right there. Continue onwards. NASDAQ, Solar, still lagging. Be careful there. Small caps lagging, not a lot of power there. Oil lagging, be careful there. Well, now look at this one. Aerospace and defense picking up. Look at the weekly. Positive here. Basing, something to look to, taking out these tops on XAR. But again, the constraint, it's going to need a good market. XBI, biotechnology lagging, home builders lagging, materials. That's how you build homes, right? Lagging, not a lot of power there. XLC, not a lot of power there. Communications, energy, lagging, stay away. I'm not trying to be cute and funny. It's just you don't have to overthink it. You look at the chart, you say there's nothing there. Go to the next one. Go to the next one. Financials picking up a little bit, and that's a plus. It's nice to see financials moving. It says that there's some strength in markets, and it's important to have strength in financials. Industrials picking up a little bit, but nothing super clean there. Good on the weekly. It has to take out the tops here on the daily. It says the rally is spreading out a little bit into industrials. Technology's picking up just a little bit. Consumers picking up a little bit. Utilities, yeah, but still lagging. Lagging in healthcare. Look at healthcare's lagging. You got to be kind of cautious there, okay? Consumer discretionary, not a lot of power. Metals and mining picking up a little bit, okay? But again, it's below the falling 50-day. You'd like to see some more power there. Oil, lagging, leave it alone. Retail, not a lot of power, leave it alone. Software lagging, be cautious. Then we go back to the top.
So here's the quick takeaway from Pat's analysis. This is still a selective market. There is strength starting to surface in technology. Semiconductors are picking up. Precious metals, especially gold, have been leading. But we're also seeing plenty of areas still lagging, like energy, financials, and small caps. This is a stock picker's market. And in this kind of environment, spotting leadership early can make all the difference. That's exactly why I want to spend a few minutes on this week's educational lesson. This is about paying attention to repeated sector strength and using that information to stay ahead of the crowd. One of the biggest edges in this business comes from paying attention to repeated sector strength. Not after everybody's talking about it, but while it's still developing right in front of you. Lately, gold stocks have been a perfect example of this idea in action. For weeks now, names like Agnico Eagle Mines, Newmont, Barrick Gold, and Royal Gold have been showing up on our key list. Quietly, consistently. While the market's been chopping around and news headlines have been grabbing attention, these stocks have just kept forming bases, tightening up, and breaking out. That's not luck. That's not random. That's the power of doing the work every single day. Because when a group keeps showing up on your list again and again, that's not noise. That's signal. That's the real-world footprint of institutional buying. And this applies to every market cycle. Sometimes it's oil stocks. Sometimes it's semiconductors. Sometimes it's financials. This time it's been gold stocks. The key list becomes more than a watch list. It becomes your sector strength detector. It becomes your leadership radar. That's how professional traders climb the wall of worry, with focus, with discipline, and with a process built to catch strength before the crowd. Do the work, trust the list, follow the footprints. That's how we stay ahead of the trade. And with that lesson in mind, let's turn our attention to the MAXLIST stocks. Because if real leadership is going to emerge in this market, it's going to show up here first. These are the institutional darlings. These are the names that money flows into when the market is ready to move. Let's hand it back to Pat for the MAXLIST.
Apple. Now, here's the risk. It's below all the moving averages, the 50-day and the 21 EMA. It is basing here. What do we like about it? Look at the volume spike on that bar, folks. Biggest volume bar in months. And it was an up volume bar. And look at where it closed in the top, probably 5th or 6th of its daily range. All right, that's a plus. I've already got the price alert set. What do we want to see? Take out these tops with volume. That's something to watch. Now, I got to share this with you, okay? I'm not a cheerleader like, oh, go, 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 except when things are really good, and then we push it. We go on margin, etc. Tons of overhead supply here on the daily. Tons of overhead supply here on the weekly. Be aware of that. Below the key moving averages, it's riskier. How do we lessen risk or control risk? If we buy less shares. And I taught this at IBD meetups for years. It works. Let's continue onwards. Amazon lifted up on good volume here. Look at that volume spike on the daily. Okay, basing here, still below the falling 21-day moving average right here. Institutions team used the 50-day and 21-day exponentials, a powerful moving average. This is something to watch. I like that volume pickup. Okay, goes sideways here. Perhaps it lifts off. Something to watch going forward. Amazon. And yes, it's a MAXLIST stock. AMZU, this is the lower priced way to get into it. I pointed out as a courtesy. Pretty similar pattern to Amazon. There's Amazon at $185. And here's AMZU at $27, $28. Lower priced way to get into it. Just pointing that out as a courtesy. Alibaba, basing, a lot of overhead here, though. Okay, a lot of overhead. It would be risky. Well below the 50-day. Here's Apple again. There's Amazon, closer to the 50-day. There's Apple, but it's Apple. Go right here, Alibaba, basing. What do you like about this? First off, it's basing. I'll draw this to help you. Secondly, good volume on that bar right there. What would we like to see? Lift through these tops with volume. And I do stress, folks, it's going to need a couple of constraints. I'm going to be very specific here. It's going to need a good market. The M and Mission Winners comes first. markets. It's going to need a good market. It's going to need good price action backed by volume. Those constraints must be met. There you go. Let's continue onward. BIDU, a little bit sloppier. Bob, a little bit better base than BIDU. So we stick with Alibaba. Goldman Sachs, the tail bar, it's a little too loose, too wild and woolly in here. Okay. Therefore, not on the list. Continue onward. Google. Now compare and contrast. Look, kind of wild and loose. Then you look at Google and say, oh, that's basing nicely. Oh, what is it? Yeah, it's another MAXLIST stock, folks. And I'm well aware there's a ton of overhead supply in here, but note the volume on that bar. That's institutional buying. Volume here too. Something to watch. You've got a clean tops across here. Something to watch going forward on Google. All right. MasterCard, higher price, NASDAQ, a little tougher. I can see it, but I'd prefer these other institutional stocks instead of MasterCard. It may go, pointing it out to you, it's one you could watch. Definitely one you could watch. Meta, we do a compare and contrast here. Google ran up. Baba is close to the pivot. Didn't really fall that much, did it? See that? There's Baba. BIDU close. Goldman Sachs possible. Google close. MasterCard close, right? Across these tops here. Good volume on that bar. MasterCard MAXLIST stock. One to watch. Meta. Now we do a compare and contrast with Meta. Rallied up. Larger travel range here. 40-point travel range here, folks. It's a little bit looser than these other ones that I showed you. It gave back quite a bit on this decline. I'd be careful with that. Just pointing it out. Okay? Yes, it's a MAXLIST stock, but it's a little loose. If you do decide to buy what could be a potential entry, as a courtesy, take out Friday's highs. It needs to take out Friday's highs with good price action, good volume, and a good market. The M and Mission winners. We need those constraints met. Pointing that out. Microsoft. Now look at that base on Microsoft right here. And what's it doing? It's approaching the falling 50-day. Here's the weekly. Look at the volume on the weekly that came into it. This is one you might want to watch this week. Microsoft. Taking out Wednesday's highs, which would also correspond with pushing through the 50-day. What are the constraints that are going to be met, that must be met? A good market, good price action on the stock, and good volume. And you can say, boy, you say that a lot. Yeah, it works. It works. And that's what we do. Netflix, another one. Basing right here. I like the volume pickup on that bar. Look at the weekly. This closed up on the weekly, folks. That's power in a pretty crummy market. Go across these tops right in here. You can see that volume spike right there. And look at where it closed in the top fifth of its daily range. So watch Netflix. NVIDIA, up on heavy volume, pulls back on lower volume, constructive. Watch NVIDIA too. I'm not trying to overwhelm you with a bunch of stocks. I'm trying to point out ones where you can, the greatest probabilities of making money. That's what we're after, okay? So we look for the best of the best. NVDL, that's a derivative of NVIDIA, okay? And that's one you can watch too. It's lower priced. So here's NVIDIA at, there's NVIDIA at $110 a share. NVDL's around 37, 38 bucks. It's a little bit cheaper. It opens the realm where you can buy a relation of NVIDIA through NVDL. And it's got pretty much the same price movement. So it's something to watch going forward. Tesla. Basing here, I like that volume spike. And yes, folks, it's a MAXLIST stock. And on the weekly, it closed up on the weekly. Okay. And what else catches your eyes? Up on heavy volume here, pulls back on less volume. Up on heavy volume here, pulls back on less volume. What's it telling us? They're selling in here, but there's some institutional buying occurring too. Something to watch going forward for a potential buy on Tesla. By the way, you can't catch me in a lie. I already have the price alert set. See it? The little green hash mark? It's on there. TSLA, same situation, it's lower priced derivative of.
That wraps up today's episode of Market Edge, Ahead of the trade, big thanks to Pat Walker for another excellent breakdown. And as always, thank all of you for being here with us every week. If you found this helpful, make sure to like, subscribe, and check out missionwinners.com for more resources, more lessons, and more tools to help you sharpen your trading. Master your strategy, trust the process, and maintain your edge.